Alright, let's dive into this chaotic financial snapshot. First off, why should you care if oil prices dip or stocks wobble? Because this isn't just about numbers on a screen, it's about the invisible threads pulling our global economy. Let's start with the Strait of Hormuz drama. Iran and Oman are supposedly close to a deal to reopen this critical oil artery. But here's the kicker: Iran wants control, and Trump's administration says no fees. Sounds like a stalemate. What's fascinating is how a single 21-mile waterway can hold the world hostage. 20% of global oil flows through here. One spark, and gas prices skyrocket. But here's what people miss: this isn't just about oil. It's about power. Iran's insistence on control isn't just economic, it's a geopolitical flex. They are saying, we dictate terms here. Meanwhile, the US wants to keep it an international zone. Classic clash of ideologies. And yet, markets are already pricing in a resolution. Oil dipped slightly Friday. Why? Because traders are eternal optimists, or maybe just tired of the headlines. Now, let's talk about China's exports. Up 24% in July. That's insane. But here's the twist: the surge is in high-tech goods. Electronics, AI hardware, maybe even components for that AI boom everyone's panicking about. But wait, if China's exporting so much tech, why are global markets selling off AI stocks? The Nikkei and Kospi dropped. South Korea's tech-heavy Kospi fell 0.6%. That's confusing. Maybe investors are realizing that China's tech exports are a double-edged sword. Sure, it's boosting their economy, but are they undercutting competitors? Or is this the beginning of a tech Cold War? Also, China's trade surplus narrowed. Imports slowed. That's a red flag. If they are buying less from the world, what does that say about global demand? Are we heading for a slowdown masked by a tech facade? Then there's SpaceX. Their shares just tanked below the IPO price. Remember when they hit $225? Now it's $115. What's the deal? Well, 911 million shares hit the market after a lockup expired. Classic sell the news scenario. But here's the irony: SpaceX is arguably the most innovative company right now. Starship launches, Mars ambitions, yet the stock's struggling. Why? Because space is a long game. Investors want quarterly profits, not moonshots. It's the same problem Tesla faced a decade ago. But SpaceX isn't public, so maybe the market's pricing in uncertainty. Or maybe insiders cashing out spooked everyone. Either way, this tells me private markets are still frothy, but public investors are skeptical. Which side are you on? And the jobs report. Hiring slowed to 57,000 in June. Wait, that's the strong economy everyone's cheering. Last year we were adding 300,000 jobs a month. Now 57,000 feels like a snooze. But unemployment claims are still low. So is this the new normal? A Goldilocks economy where growth is just enough to avoid recession, but not enough to spike inflation? Maybe. But here's the deeper question: as AI automates jobs, how do we measure strong employment? Are we clinging to 20th century metrics in a 21st century economy? Putting it all together, markets are mixed. Oil's a geopolitical chess piece. China's tech surge might be a mirage. SpaceX reveals investor impatience. And jobs data makes us question what good even means anymore. The bigger picture. Everything's connected. Hormuz tensions ripple into gas prices, which hit consumers, which affects China's exports, which ties into AI investments, which crashes stocks, which makes the Fed hesitate on rates. It's a web. And here's my take: we are in a fragile equilibrium. One wrong move in Hormuz, one AI bubble burst, one trade war reignited, and all these stable markets could unravel. What do you think? Is this the calm before the storm, or are we adapting to a new normal of controlled chaos?